So what I like to showcase for the most part is longer term setups because I find them to be the most consistent. And still watching Boeing to break out. I don't think it ever really did last week. You never had confirmation. Boeing is a piece of shit. Yes, I know, but hear me out. It still hasn't broken up or down. So hold your piece of shit conviction until it breaks below or above. Shit floats, man. Ain't that the truth? Um, but yeah, I would say I still would lean more towards this breaking out. I guess it's hard to say. You want it to be in the upper half of the Keltner and not be pointing downward if it was actually going to base out. And then you look at the weekly. So the thing on the weekly that catches my eye now on Boeing is you count if you see this here. This is a 9 count sequentially. Um, Meaning 6 of these bars have closed beneath the opening of the previous bar. And if I went to a bar chart, you could see it. Not that it would clear anything up for anyone who doesn't look at these, but that's what it works off of. Um, but you have a 9 count here, which means the selling may be pretty exhausted to the downside on Boeing on the weekly, and the way it's wicking up off of these averages, off of this gap right here. Um, I can move this line a little bit lower. It's like right here, but I'm not going to. But that's sort of where it's wicking up off of. I think it's probably a long signal, um, still. And will it confirm? I don't know, but you have to wait till next week. And for this week, you want it to at least close at the level it's at now, which is above 201. If you don't close above 201 this week, I just don't like it. Um, I would expect it more to break down. If it doesn't move this week, I would expect it when you get towards because today's Tuesday. Yeah, today's Tuesday, March 3rd. You get to the 5th, and this thing hasn't broken up or down yet, then it's probably going to on Friday or the 5th. Today's the 5th. If it doesn't break out in 2 days, you probably see a direction by Friday out of this formation. So swinging into, yeah, anything that you guys are swinging, or anything like that you're not swinging that you want me to look at, go ahead, throw it out there in the chat. Don't be afraid. Even if you think it's stupid and it's an idea you would never present in Jay's chat because he's just gonna yell at you for being a dipshit and for wanting to buy a shitco, you bring it here. This is your safe space. I will once a day I'll look at it and either reaffirm that you're an idiot and it's a shitco, or maybe it's not as shitty as Jay thinks sometimes. Or, not just Jay. I shouldn't shit totally on Jay. It's really not mostly him. Uh, I'm more just taking shots at the more fundamental people. Although I do consider him my own stuff. But into it, looks fine. Weekly Keltner above the weekly Keltner right here. To wick off initially would make sense. Um, I don't love this in the sense that I think this trend is maybe starting to turn on you, and you have to be careful of being caught in the handle, being chopped up in the handle of a longer term trend on into it. And it happens that on this specific company, I had already drawn lines um, since their last earnings, and I was thinking you'll get this. You have this move on the weekly, right? And I think you fill out this handle, so you're probably gonna come down to here, wick up. I think it's going to fill it out a handle for several weeks. I don't know if I want to be the one swinging calls, but I certainly understand why you would. Um, it is a pretty volatile drop for into it. Yeah, yeah. I just even on the daily, I think like yeah, I can see the idea of a swing, but I think you also have to respect that perhaps momentum has shifted to the downside, right? I mean, a minus 4% day. I know the market was red today as well, but I think you had to be careful. You break down this range. Um, you have a level like right here that you're basically the bottom of today was at. And if you break below this level, then I don't think you really want to be in this, right? Because I think you're going to the bottom of the eventual handle is going to fill out, which might be a little lower. Um, down here at like 600. But that's for Intuit. I know Jesse asked me specifically earlier about XLU. I was looking at XLU primarily on the weekly. So these lines live on the weekly chart. If I go into the daily on this on Webull, which is what I'm showing here, the lines get pretty messed up. So I'll probably have to switch to a different brokerage at least for this my crayon segment in the future. But when I look at utilities, and I'm usually pretty negative on utilities myself, so take this with a grain of salt. Or you know, it takes something for me to say I think they're constructive. So you don't love what it did today. Obviously, being up 1.5% and then losing all of it and ending the day red is not ideal. But if you also go in and you look a little bit closer, I think what you see is maybe it still needs to fill out this weekly trend, this big weekly sort of wedge that it's filling out here. So you could say also it's a parallel channel, I guess, when you look at it from just a shorter perspective. I could see you looking at this and thinking, oh, this is just a parallel channel and it's not actually a big triangle. Like something like this, maybe. But I think the longer trend is way more of a one where it's gonna decide here next several weeks or so, or this week, whether it wants to break out from here or not. And that breakout level is right at 63, 62.90. So I mean, is this and it's not surprising that we were to gap up and then sell it off on XLU because utilities are bitches. Much like commodities based stocks and oil are bitches. Often at times. So I look at XLU. I think it's still constructive. I just think you did uh, a move up a little quickly today, and you'll have to see what happens tomorrow because it's just teetering on this breakout level. It's still just sitting right at it. It's like 62, 60 ish, right at this horizontal or sorry, descending rather weekly resistance line. So that's what I think of on XLU. Sorry if I'm rambling a little bit. I'm trying to keep my thoughts together. Google, I drawn this out on Google a little while ago, um, before it started falling like this. But the thing on Google I look for is on the daily. Don't worry about these lines in the daily that I drew, but you want to see a reclamation of this 200 moving average. And I know it's a little different on other people's brokerages and stuff, but that's where it is on mine. And the weekly, so the one reassuring thing on Google you have here is the weekly bottom Keltner, and you touched it today. At least I think it was today, right? It made new lows today. So you touched it today, and you're starting to wick up off of it by about 1% so far, right? So not very much, not enough to say, oh, the trend to move is over to the downside in the last 2 weeks or so, and it's going to continue back up. You can't really say that, but I think what you've had is effectively 6 weeks of a controlled downside on Google at this point. I know this was green in between, but it's just a controlled downside move. I think it's filling out a handle, and I don't know how deep this handle needs to be. It could be half this deep, right? So maybe you're selling off a little early here and it's going to come up a little bit early. But I think traditionally the month of March is not a positive week. And if you consider that, especially in perspective, or not a positive week, not a positive month, and if you take into perspective that March is one of the best months to basically take off because market returns aren't usually very good, in combination with a lot of these charts that look like they're needing to handle out these moves, that's kind of what I get at when I'm saying I'm generally positive. Um, this year, but I think a lot of these charts are longs that you're gonna want mid March or after March, right? I think they're setting up to move up after like this in the summer or something, not necessarily give you that many returns, at least on the mega caps through March, um, or the spring as a whole. So it's kind of an important thing to note when you're looking at overall markets. I think Apple, they got to 170, it froze there. Not surprising that it would stick there. I was talking to Jesse last night about Apple. Um, just it's because it's just gonna go to 170, right? And then we'll see what happens. It's done this before, right? Where it's gone underneath it. It's gone underneath 170 and it pops right back up every time. And maybe this is different this time. Um, I've seen a lot of things on Apple that could make you think that. You're not a clown, Jesse. But the 170 area is where I look for an initial, maybe a dead cat bounce up to fill that gap or something like that, but not immediately. You have to wait. You're gonna have to wait several days for momentum to really turn, right? Even if it does bottom out and base around the 170 168 level, it takes multiple days for something to go counter trend when it's in such a negative negative downslide in recent memory, right? um yeah, XLU, I'd say wait for your weekly close. um you don't want to be a day trader in XLU, period. So not that worried about it. I want a weekly close over this. On Apple, you really wanted to catch here because if you zoom out and you look at where is the range Apple's been trading in, it's this range here, which is 197.70 to 170, right? So you really wanted to catch here or a little bit lower, 165, 167, right? Um, and I think you're gonna have a lot of people who are gonna get very bearish if it loses 170. But then I think what you might have is they'll sweep them down here to like 163 ish, 160 ish. If that happens, right, they'll sweep it down to the mid 165s, and we'll see if it catches on this line. Because if you look at Apple, there's a big long term trend right here that I think is well, monthly doesn't really show it properly, but there's a few touches of this line on the weekly, and I think it might catch there first. So look at some of the risk on stuff too while we're at it, while we're talking about the tech. XBI, this is why I don't really like being long stocks that have recently broken out or have had a continuation move and you're trying to catch on late or just hasn't filled the gap from the move up, because you're bound to have a highly distributive looking formation after a gap up and then a retest, right? Um, the majority of them fail, and by fail, it just means they go back and they retest, or they go back and they go lower, right? One of the two things happens about 80 to 90% of the time on breakouts, and I'm trying to get better at um, managing it and just doing all that correctly. But this is the kind of thing I'm talking about. I think it just slowly wants to chop you up until it fills this gap on XPI 97.5, and it's just really hard to judge exactly where it might base out unless it fills that, right? Um, it's this falling volume, at least the best thing you could say going for it, right? The volume is going lower while it's consolidating up here, so maybe it's gonna pop back up in volume and pop back off this daily Keltner. Very possible, right? But for me to be comfortable being long something with loser stops, I really want the gaps to fill, be a little healthier structure. Tim Apple needs to pull a rabbit out of his ass. It seems like it based on the chart, right? But it seems like they always do as well. Um, see other charts we were looking at. I think I just have a couple more. I just want to look at indices before I forget, because I think a lot of people talk about indices and they're talking about people are trying to call tops a lot right now and trying to call bottoms a lot on things. And I think there's something else going on. And I think you're in this trend. Vision Pro ain't it? Oh, I mean, we knew that though, right? We know that, right? Apple knows that. They're gonna have to come out with something else in their phones, especially, right? Um, but so this is the start of the year, right here, on the daily, on Spy, and we started the year by falling back into the Keltner on the daily, and then popping back up off the midline, and then we did it again mid-January, same thing, before we continued higher. Now, you do that eventually, you do that enough, and it's the trend. So I think you did it twice to start the year, and so this is the trend that you should expect. And I think it confirmed towards the end of February on the 21st, right before, like on Nvidia's earnings, basically was decision point, because of course it is, right? The market loves to do that around major earnings or major news events, right? So I think you were chopping in this range, waiting for something to push it up, and you had Nvidia's earnings, which were really good, pushed it up, right? But now you're in a different range. Like now you're in and you had to, you're first of all you're filling out a range, right? So the range top might be here, but I think you're in a range now. So we were in a range to start the year, and we're in another range now. And I think it's right here, like 515 ish, 514 ish. But I think it's just the same thing, um, different levels. So what I really wanted to see, I wanted this to happen. Yet, not yesterday, but last week. So this is, to me, it's like, okay, they're gonna go down and falling wedge pop this thing again, right? So I'm looking at this forming the first three candles of this, and I was like, cool. I hope we get another red day, so we get to this 502 like 85 ish, and then we pop back up again. Um, but of course it stops a little early, and it pops up a little earlier. So then I think what we get then is an extended move to the upper Bollinger on the daily, the 2 standard deviation to the upside extension, and then this is just mean reversion, right? Within a trend, that a trend has shown you where it wants to bounce each time, since the start of the year. It's the midline Keltner, right? So you're getting extended, you're staying there for a week or so, a week or two, and then you're going back down to retest the mid Keltner to see if the trend's still real. And so far it has been, right? Um, but you get a little more nervous every time that it goes back in and tests it, right? But I just wanted to point it out, like nothing's broken up or down, nothing's really changing. You're in a range and just a different level, or a different set of levels than you were at the start of the year, or in the whole last month. So that's all that's happening. I want it to retest 502.85 selfishly, because I want to see a real price and volume response at that level to see what's real or not about this market. So I think that's how we gather information, right? Wait for the response at the key level. And so we're just waiting for the slow descent, I think, down to 502.85, and then we'll figure it out from there. Um, AirBuds are the highest margin product they sell. AirPods are pretty fucking good. I have some myself. Now Q's, I mean, that's a pretty clean fake out over their level. You had the 4 knock and then the breakout move, but then along with Spy, it was overextended on the daily, right, to the upper Bollinger, and so it gets its red day. But Q's, I think, still have to follow Spy above to the next level of ranges, because it hasn't done it this year. or it didn't do it in February, right? You had SPY broke to new highs, but not really Qs, or at least not for a sustained period. So I think you gotta be wary, be vigilant about the way all these indices work together because there is divergence happening, and I think you need to be aware of it and be in the stronger sectors. IWM still fucking around. Same story as Qs basically, right? Sort of a fake out move to the upside, sell off, and then another red day, right? Dow Jones is more of a healthy chart, but it's also Dow Jones. So, oh yeah, TLT. I need to update because I've been mentioning I'm bullish on TLT for the last 2 weeks probably, and it seems to be the right move so far. I really think it's basing off of this equilibrium at 92.40, and you're gonna see easily 99, probably a measure move up to 100 something, 104 or something like that. But then if it gets there, you have a lot of tests of that level already, so you're probably gonna go even higher. And with the rates coming down, isn't that what's supposed to happen, right? What up, Callie? You guys shaking out your tech calls? I think that's probably good. I don't love the. I mean, of course, today is Tuesday, so things do often um, reverse after Tuesdays, right? So we have to wait and see. Wait on the weekly closes before we say anything too definitive, right? Um, gold is breaking out, but hitting a doji on the daily now. But I still think when you zoom in on gold, what's the measured move from this handle, right? I mean, if we're talking about it's building energy, what even is the measured move from this handle? It's way higher. I mean, am I like tripping, or is that like is there like a 30 to 40%? Or not 30 to 40. I just say like a 20% upside on gold possibly in like the next 6 months. Because I kind of see it. I can kind of see it. Bitcoin, I never look at Bitcoin, but it's gone insane. I see people calling tops on it today and stuff. Ooh, I could see it topping out here for sure. But also, hmm, nah, I'd be selling my Bitcoin. I'd be selling my Bitcoin. Do you have any Bitcoin chads in here? Bought it at 18K and are still holding it. Dog with hat? Is dog with hat? Can I bring it up here? Dog with. No. I can't even bring it up here. This brokerage sucks, dude. Probably filled with hedgies. Let me see something here. Starbucks getting dicked on. Holy shit. Poor coffee company, dude. What about Dutch Bros? They were doing well last few days. They seem to be doing okay, all things considered. EDX pulled back at the 200 daily. Lumen. Lumen Onion. Is that breaking out? No. No. No way, right? Nvidia. Nvidia. You got more Nvidia on the dip. Was there a nice dip today? from 860 to 837. Hmm. I don't know, man. I think I like